Now let us go ahead and take on this example. It is an example where there is a combination of IND AS 115 on revenue from contract with customers and IND AS 37 relating to onerous contracts, or you can say money losing contracts. Now where the cost exceeds the benefits. Now let us go ahead and read this question. Yes, ma'am.
Jain Construction Company Limited undertook a contract on 1st January 2017 to construct a building for 80 lakh rupees.
Okay.
The company found on 31st March 2017 that it had already spent 58 lakh 50,000 on the construction.
Okay.
Now, prudent estimate of additional cost for completion was 31 lakh and 50,000 rupees. What amount should be charged to revenue and what amount of contract value to be recognized as a turnover in the final accounts for the year ended 31st March 2017 as per the provisions of IND AS 115 revised?
Okay, so let us go ahead and take on the solution. Now let me explain these terms. Now what is the amount of contract revenue or transaction price? It is rupees how much? 80 lakh.
80 lakh.
And what is the cost incurred for the year? It is rupees 58 lakh. 50,000 is a cost incurred to fulfill the contract by the year end. And another 31 lakh and 50,000 is estimated cost to complete. Therefore, the total cost is how much?
90
rupees 90 lakh will be the total contract cost. And you can see for yourself you're going to incur a loss going forward. Why? Because the transaction price is rupees 80 lakh. But what is the total cost? It's going to be 90 lakh. Therefore, there is a 10 lakh rupees loss staring at you. Is that fine?
Yes, sir.
Now, next. That is step number 1. What is that?
The
It
10
is,
lakh loss.
the
and
10
90
lakh,
expected cost.
Is a 10 lakh is supposed to be the loss. And what is the second step? You got to find the
stage of completion.
percentage completion, or supposed to be the measure of progress. So what you should do, divide, you can use a cost to cost method. Now what is the cost incurred to date? 58 lakh and 50,000. Upon the total contract cost, how much? 90 lakh estimated into 100, how much you get? It is 65% is a percentage completion. So what is a contract revenue to be recognized? Very simple. You can apply this percentage on the contract price, or I say transaction price, which is rupees 80 lakh. On that you apply 65%. It is 52 lakh is a contract revenue or the turnover to be recognized in your profit and loss statement. Agreed. Now what is a loss already suffered by the company in the current year? You can check that. Now what is a revenue booked? 52 lakh. And what is a cost incurred to date? 58 lakh, 50,000. That means rupees 6 lakh and 50,000 is a loss already suffered by the company, right? But what is the total loss expected on the contract? 10 lakh rupees. That means another 3 lakh and 50,000 is a loss expected, and you are supposed to make a provision for rupees 3 lakh and 50,000. And that provision, nothing but is a provision for an onerous contract where the cost exceeds the benefit. Is that fine?
Yes, sir.
And that provision should be made applying IND AS 37 on provisions, contingent liabilities and contingent assets. You know, that is supposed to be the name of the or title of the standard. Now, what are the entries you record in your books as a contractor? You are the contractor and the customer is a contractee, right?
Yes, sir.
So in the books of contractor, that is you people, what is the entry? Just see, for the cost incurred, that is a cost incurred to fulfill the contract. What is the entry? It is a construction
Cost account debit.
cost debit, expense account debit, and then to
Cash or bank.
cash or bank. And this expense will go to profit and loss account anyway. And then what is the next entry? It is a contract asset account debit.
To revenue.
The amount is rupees 52 lakh to sales, or you can say revenue, or a fancy name, turnover.
Turnover.
What is the amount?
52.
Rupees 52 lakh, and then that will be credited to profit and loss. So if you net off, there is a 58 lakh 50,000 debit and 52 lakh credit revenue. Therefore, there is already a loss of 6 lakh and 50,000. Now, what is the entry for rupees 3 lakh and 50,000 loss to be provided? You should debit your profit and loss account. That is a loss that you are going to incur on what contract?
Onerous.
An onerous contract means it is a burdensome contract, where it's a troublesome, you're going to incur a loss, a money losing contract. Then 2, provision for onerous contract, and that amount, the provision, will appear in the balance sheet as a liability. Is that fine?
Yes, sir.
It's a very important sum from examination standpoint, guys. It's a combination of IND AS 115, IND AS 37. The same sum has come before in the past in CA final in accounting standard 7 on construction contracts. But this is the answer you are supposed to give applying IND AS 115 and IND AS 37. Bye-bye.